Oh, aloha, everyone. Joshua Hayes at BigWaveTrading.com. Well, how about the past week for the stock market? The stock market bucked seasonality going back to 1950 of what is normally a seasonally historical, very week for the stock market. Since 1950, the past week has seen an annualized percent return for the S&P 500 of negative 25%. Almost 70% of the time, this week is a down week. A little bit over 30% of the time, it's an up week. Well, this past week, it was an up week. But once again, unbelievably, we have another one of these V-shape moves happening in the market. So, unfortunately, the V-shape move came on below average volume. We're just going to look at three indexes, the SPY, QQQ, and IWM. It was great to see the IWM have above average volume on Friday, but Friday was Russell Reconstitution Day. It's one of the heaviest amount of signals I get per year, because if it's a green day or flat day, I get a lot of signals, and I don't know what's real or what's not. So I'll still put orders out there, but I keep very tight stops. You got to work either immediately or I cut those losses short. Always cutting losses quickly. We have losers all the time in big wave trading. Every professional trader has losers all of the time. The key difference between professional traders and amateur and or new traders, to no fault of their own, this comes with experience and or studying history, is we always cut our losses, and I am no exception. If I'm wrong on something, right after I get long, I'm out. I don't hold and wait and hope. I'm out, and I wait for either another signal or there is no further trade. But with the IWM, that heavier volume with the Russell Reconstitution came with the reversal doji. Shooting star, gravestone doji, I don't know what you guys call it anymore, but bottom line is not good. And what I want to start showing on these charts are all these negative divergences that just keep on playing out. You can see the IWM just looking at this chart right here. This is just the TTM trend momentum. Let's just look at this one. From this high to this high, look at what the high bar is and look at what the current high bar is. That's negative divergence. If we look at the QQQ, it's looking good, strong uptrend. But look at these high bars here compared to where we were at here and where we're at now. This is called negative divergence, so we're going the wrong way. The SPY, with that V-shaped move, look at where the histogram was here. Look at where the histogram was here at the previous high. Look at where it's at now. It's not a killer. It doesn't mean that the market can't keep melting up here. In fact, I expect it to melt up here. But what's unfortunate is when price doesn't line up with seasonality, you don't get the most confident signals. When I have everything line up, sentiment, seasonality, price, volume, and then I get some good looking charts, I can really push it on an end of day side and not have to worry about any surprising gaps against me or being chopped out of stocks, which is what's going to happen right now as long as we keep this volume profile and these negative divergences occurring. V-shaped rallies always end the same way. Remember, this one ended the same way. The only thing I want to show you is how strong the SPY has been around its 50 since September. Back here in January, break below the 50, immediate reclaim. March, break below the 50, immediate reclaim. Later on in March, we break below the 50 intraday, immediate reclaim. In May, we test it, immediate rebound. Right here in May, same thing as in March, immediate rebound. And then we just did it here in June. Crash below the 50, immediate recovery of the 50. So here's how you know things are going to change. When you crash below the 50 and then you don't rebound. That's when things really become problematic. But getting to more of these negative divergences, let's go ahead and see if we can move this entire pane over here and just isolate the RSI. I just want to show the lines here. SPY here, RSI here, RSI here. These are called negative divergences, and we're seeing them on. I can't grab this. Why can't I grab this? Forget it. But either way, you see the slope of the RSI lines compared to the market. You see the QQQ. You can see that we're moving higher here. RSI line, though, downtrending, right? No positive divergences. That's what I'm looking for. IWM, let's just look at these recent highs. So you can see kind of flat right here. RSI, downtrending. You starting to get a picture here. So let's move RSI off, and let's bring up the PPO histogram. So once again, let's do that again. We can look at the PPO histogram. Negative divergence, slightly, but it's there. QQQ looks good, but from where the old PPO high is to where it is now, you can see negative divergence. SPY, negative divergence from where it was there to where it is here. And even in the short term, this line level to this level, negative divergence. I just want to show you this. Doesn't mean it's a death knell for these market indices, but the bottom line is positive divergences are better than negative divergences. It would be better to see the SPY have lower highs here and like positive divergences than this line moving up and then this line. Why did that go away? Clearly moving lower. I mean, look at that. That's major negative divergence. IWM, remember, we're just looking at the two most recent peaks. Negative divergence. QQQ, look at this. Pretty clear to me. Something isn't completely lined up here. So I just want to keep on showing you. It's not just one indicator. One indicator is never what I'm looking at. I want everything to line up. The QQQ, not too bad on the full stochastics. Looks pretty good. Now short term, once again, we have very short term negative divergence showing up compared to price moving higher here in the QQQ. IWM, stochastics, negative divergence. SPY, stochastics, it's slight, but it's still negative divergence. So it's not just on one indicator. You're starting to see it's on a lot of indicators. MACD, negative divergence. You're starting to understand what's happening here. It's not a death knell, but once again, a V-shaped rally on below average volume. If it fails, I'm going to reiterate one more time. Who will not be surprised? Me. Am I fighting it? Absolutely not. Price is all that matters. I will continue to move with price, but I just wanted to show you guys, it's not like it's just one or two indicators that are showing negative divergence. It's all of them. And not only that, there's some market internals, new highs to new lows, that are showing negative divergences as well. So it's in more than one index. It's out there. I can do this on every single indicator. I will just show you guys one more indicator just to bring home a point, and then we'll wrap it up here just to so everybody, accumulation distribution. Now, this is the one that keeps me happy. This is the one I wanted to end it on just to show you they're not all bad. And in fact, this is my preferred leading indicator. Now, short term, there is a slight negative divergence from there to here, as you can see. But from this recent high to here, confirmation. And overall, accumulation distribution is moving up. I like that. IWM, same thing. No negative divergence here. Nice, steady uptrend. I like that. That keeps me very positive on this market. QQQ, starting to move up in the very short term. You can see short-term negative divergence, but overall, good, good, good. So there's nothing alarming with the overall accumulation distribution in the market. It's still very bullish. But in the short term, these V-ramp lower volume moves seem to always end up the same way. So the good news is Monday, Tuesday, Wednesday, actually, because we're heading into the 4th of July weekend, next week is very positive. The 20th, 29th, and 30th actually have a combined return going back to 1950 of a positive 30% annualized gain, with more than 75% of the weeks higher, 25% lower. So we got some great positive divergence or positive seasonality. However, we were up during a seasonally weak week. Those gains, no surprise, happened to come following a bearish previous week, which was just bullish for us. So will we see a strong week next week with us extended and with all these negative divergences? Who knows? Price is all that matters. Price is all that pays. That's where I will be focused. But if we don't continue higher into the new week, I will not be surprised. One more reminder, while I'm short-term concerned about this market, and we have a very bearish August, September, October seasonality coming up. Ultimately, I am still bullish and will remain bullish until the monthly PPO goes below the zero line or the weekly SMA, 200 SMA on the SPY is violated, retested, and then that first low is violated. Until that happens, I remain ultimately bullish and want to be long stocks. And so with that the case, I want to review a really, really good setup that is working perfectly and then give you guys one new long idea for Monday. It's a solid setup, but I don't know if we can trust the surge in volume and BOP because it was a Russell reconstitution day. Either way, we're going to set that trade up for you right now. Not right now. First, we're going to review EVC. Now, guys, I want to show you what a chart looks like that I really start increasing size on. Did I put 50% of my account capital into this? No. Why did I not do that? Seasonality. With the way the market was looking, it looked rough. We were starting to come into we were already now in a seasonally negative period. It's been choppy. I didn't want to load the boat on this trade idea. That being said, what you're looking at here is a really good signal. It's not great. It's not perfect. It's not an all-in trade with whatever end-of-day account capital I have left in my Interactive Brokers end-of-day account. It is not a 50% in with your end-of-day account. So let's say that I have, let's say that I'm trading with, what the heck was that? With a with a $100,000 account. If I had, let's say, $80,000 out in cash, a certain signals, I'll push the whole 80K in. Now, especially since these signals are so rare, if it's really good, 40K of it will go in. But what I like to do right now is just risk R's per trade. If the signal is good, depending on how many scans it makes, I'll increase the size. EVC was in my top of the line perfect speculator scan, made my price volume BOP scan because the reward to risk ratio was so tight. By just risking 2R max loss on the trade, I was able to get decent size in this position. That being said, should have really have loaded up. But here's what I had on EVC on this day. I want to show everybody, make this very clear. We have a nice engulfing candle over candle pattern off of the uptrending 50-day SMA within a tight consolidation pattern. That's already in a longer-term uptrending stock, hence the 50 and 200 SMA. Thumbs up. We have a pocket pivot point signal on today's surge. And before the pocket pivot point signal, we got 3 of them within the base. Thumbs up. I like it. We got a volume thrust, and it actually truncates the previous volume bar ever so slightly. Ever so slightly. It even truncated the volume bars on a Zoom 3, but as you can see on a Zoom 2, it didn't truncate those volume bars. Zoom 1 is referring to telechart whenever you hold shift and press 4, 3, 2, 1, 1, 1. Now, the best signals, the volume truncation, will truncate all of the previous volume bars. But as we can clearly see here, this day in June in 2020 had more volume than this day here. Also, love that balance of power surges to max green. So, great signal. Why is it not perfect? Once again, the volume truncation didn't truncate all the previous volume bars. There's red BOP in this chart. There's tall red volume bars in this chart. And even though we have a flurry of pocket pivot point signals, there isn't a ton of pocket pivot point signals in this chart. Normally, I would want 3 is good. That's the minimum I want to see before a signal within a consolidation. But 4 or 5 and then multiple days in a row of pocket pivot point signals, that's better. Getting more granular, the 5, 10, and 20-day simple moving average are not stacked properly. Notice when the 5, 10, and 20 is stacked here, how it immediately explodes. We have the 5 below the 10, but besides that, it's not that bad because there's one main thing that they're all doing. They're all trending higher. The 10 is higher than the day before. The 5 is higher than the day before. The 20 is higher than the day before. That's good enough, but once again, without the 5, 10, and 20 being properly stacked, it isn't perfect. EVC, this is what the signal looked like. Gave it out to everyone before I entered the order. Good to cancel buy stop at 410. 1% limit offset gives me a limit at 414. Stop 410. Limit 414. What am I risking to? The most recent lows. I'm calculating my size based on this low. So I take 370 and I went too far. Subtract it from 410. 410 minus 370. Got that total, divided it into 2% of my account capital because that's what I was willing to risk initially on the trade. And that was my share total. Now, EVC, perfect the very next day. You'll notice it opened at 410, 1 cent above my stop. But I had a limit at 414. Very fortunate this day. I got filled, and I got filled at 411. EVC has been perfect since. It has just trended higher. It has just trended higher. Now, am I still long the entire position? Absolutely not, because that's not how I trade. I start taking profits when we get to like the 3 ATR of the Keltner channel. So on this day here, took a little bit off the table. And I'm placing and trailing stops higher. EVC consolidates, starts to move up again, taking more profits after this day. Actually, I took some off the table after this day, took more off the table after this day because they were outside the 3 ATR. And I'll show you that on the chart here next. Continues further. After Thursday, took a little bit more profits off. After Friday, going to take a little bit more profits off at the market at the open. I also have trailing stops here, 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 and still here, because it all has green bop. So I can still go all the way down to my final stop, which has now been moved to the lowest green bop day, which is splitting hairs with this bar right here. But the bottom line, EVC is acting perfectly. I want to show you one more thing about that signal. This is what it looked like the day of the signal for EVC. A few things. The volatility stop is below price. We had the tightest squeeze possible, that's where the yellow dots are, that we're releasing into a medium squeeze, following a slingshot move. And the accumulation distribution line was already hitting a new high ahead of price. That's a lot of things lined up for EVC. Was it perfect like WTRG's signal back in 2019? No, but it was damn close, and it's been a big winner. So I just want to one more time show you what that original chart looked like so you can burn into your brain. Tight squeeze, new highs, accumulation distribution, volatility stop on the lower, checking the fit over the 50 with that max green bop and volume surge. It isn't perfect, but that's what it looks like. And I want to show you when we get the next signal like that and when we get more signals like that, you can trade them however you want. I tell everybody, when you're new, 10 stocks, 10% of your capital in each, never risking more than 1% per trade. But now if you take a stock like this, a loss here, that's going to be like 3%. So now you have to calculate your size and or have an irrational stop. Now it worked this time, but when you start using irrational levels based on how much you're just going to arbitrarily lose if you go all in on a position, you're going to get shaken out of signals all the time. But EVC, 56% gain in a little over a month. I'll take that over and over and over again. We just need to get more signals like that. You don't get a whole lot during the summer, but I'll keep an eye out. So now let's get, by the way, also one more thing with EVC. In the most recent final 2 quarters, sales grew 142 and 132%. Earnings grew 167 and 114%. So you had earnings and sales growth on the side. On top of that, mutual fund ownership has gone from 175, 179, 176 up to 208 in the most recent quarter. So a lot of things were lined up. So I hope everybody learned that lesson. Let's now take you to your new long position for Monday's session because we're getting long in this video. NUS. So NUS is a new long position. Do you see why? Volume truncation of all the previous volume bars. We got a pocket pivot point signal and a surge in bop to max green. Does this chart look as quote, quote, pretty as EVC? Absolutely not. Did EVC have this kind of price action? No. Did it look like this? What does the 5, 10, and 20 look like on New Skin? Does that look anything like EVC? Is the 20 uptrending? No. Is the 10 uptrending? No. Is the 5 stacked on top of the 10 on top of the 20? No. So we don't have all of this items lined up. But is that even truncating this volume bar? In this volume bar here on ESI in 2019, is even higher than this volume bar right here. So by far, it's not a perfect stock. Nothing about it is perfect. Let's now go look at it on version 20 so we can look at the accumulation distribution line, PPO, and the TTM trend in here. So if we look at the TTM trend momentum, it's starting to slingshot. It's starting a slingshot move. That's whenever you're moving down and you start to move back up. I'm hoping we do that and we fire and we go. The bad problem is there is no squeeze. We got green dots. We don't even have the widest squeeze on anymore. It's just these dots. PPO histogram, yeah, it's curling up, but the lead line is below 0. Not good. However, look at the accumulation distribution line. I think that that's hitting a new high. It sure is. So it's leading price by leaps and bounds. Double thumbs up here. But the volatility stop is above price. So, is NUS anything like EVC? Absolutely not. Nowhere near the quality of EVC. The only thing that's close to EVC is the accumulation distribution line. Are we in a tightest squeeze? No. Is the PPO over 0? No. By the way, I don't think I had the PPO on with EVC, but I just want to show you PPO is above 0. So full alignment with that one. Do we have full alignment with NUS? No. Okay, volatility stop below, so we now know all that. Let's go back to my preferred chart for end-of-day swing trades that I do. Okay, so now we'll go over here. We got a candle over candle off that uptrending 50. Got that pocket pivot point signal. We got the volume truncation max green bop. But we don't have anything else lined up besides the accumulation distribution. We have all these negatives, the moving average lines, the internal indicators besides the accumulation distribution line. Am I going to go nuts on NUS? No. Is NUS from my perfect speculator scan like EVC, which is my top quality scan? No. But NUS is CanSlim quality with an 85 EPS rating. Sales growth in the last 3 quarters, 19, 28, 31%. Earnings growth, 37, 94, 153. Sales growth sequentially increasing the past 3 quarters. Earnings growth sequentially increasing the past 3 quarters. Mutual fund ownership has been increasing the last 5 quarters, 427, 462, 509, 571, 601. So I got enough in my favor to take this trade now. Now, how am I going to determine my size on this trade? Very simple. What am I comfortable losing? Max loss on this trade if I get long. 1% of my account capital. Do I have any further conviction in NUS to put more than 1% of my account capital at risk? No, I don't. I'm sorry, I don't. None of my new long signals for Monday are of EVC type quality. The closest one doesn't have those short-term moving averages stacked or a pocket pivot point signal on the quality side. The closest one on the speculative side doesn't have a pocket pivot point signal or stacked moving averages either. So no, they're nowhere near like EVC. But within US, what I'm going to do here is the same thing I do during taking every long signal. My good to cancel buy stop will be 58.63. I will then add 59 cents to get my limit price. What is that? Like 59.20, 21, something like that. Just doing crude math in my head. So 58.63 would be the limit. 59.21 or 58.63 will be my stop. If that stop is triggered, the most I'm willing to pay is 59.21 to get long. I will calculate my share size by taking 58.63, subtracting it from the lowest low in the base, which is 56.43. 58.63 minus 56.43. Get that number, divide it into 1% of my total account capital, since that's the max I'm willing to risk. I'll get that total, and that's my share size for NUS. If NUS triggers and fills on Monday, I'll have a stop here, I'll put a stop here, and I'll put a stop here, preventing me from losing that full 1R on the trade unless NUS triggers and fails immediately. Because if it triggers on Monday, the only stop I have is I attach the final stop. I attach 56.43 in case it does trigger and fails immediately. That guarantees I only lose 1R of my account capital. All right, everybody, we're going to wrap the video lesson up there. If you enjoyed it, please give me a thumbs up. If you did not enjoy it, thumbs down. Subscribe, ring that bell if you haven't. Leave comments, ask questions, give me suggestions. The more the merrier. I love engaging with you guys. You guys are fantastic. I appreciate all of the love and support you guys show me on the comments. But still, I would like to grow this channel. I would like to do more of these videos. And the more feedback, the more encouragement, the more interaction I get, the better. It also helps feed that YouTube algorithm monster. And that's the only way we're going to grow this channel. What I would like to do, if we can continue to grow, is to give you guys some quick 3-5 minute videos during the week of new long positions and or big winning stocks with full reviews, but just short, quick 3-5 minute takes instead of this ridiculous 25 to 30 minutes videos. Like I said, I could just keep going. I could do this for the next hour, but we're going to go ahead and wrap it up here. Have a wonderful rest of your weekend. I love you guys. Aloha.